Good morning, traders. This is Chris Buss with Traders Profit Compass with a morning look at markets for Monday, September 21st. Okay, so we've got some follow-up selling to Friday. It's about 7 o'clock as I'm starting the video, and the indexes are down around 1.5% to 2%. I think NQ is down about 1.4, 1.5%. Same thing with ES. Small caps are down about 2%. So let's run through the charts really quickly. For those that missed it over the weekend, I looked at the indexes and the FATMAAN names along with some spider ETFs on longer time frames, daily and weekly time frames. So if you missed that, I put a link in the on the blog site this morning, so you may want to review that at some point today to get a read on the weekly charts and some of the longer time frames. But running through this quickly, SPY daily chart looks as though we've broken down this morning. We're bouncing around in the 325 area. My first target remains this 320. You can see there's support coming in there. And then we've got the 200 down below at 310. If you're short, I would be anticipating a reaction or at least a hesitation here at 320. If you carried shorts over the weekend and you get that move, that might be a nice place to cover, take some profits, wait for a bounce, and then recycle back in. But we'll have to play that by ear. There's still a part of me that says a flush is coming. This has all been, very orderly, drips and drabs on the way down. We haven't seen that big move where everybody decides at once that, being long is wrong and we need to get out. We haven't seen that yet. So that would be a scenario where it would punch right through this 320 and like it wasn't there. So we'll have to look at market conditions today and see how price action is behaving, if it just kind of working its way down or we get more of an accelerated move. Here on the 30-minute chart, we've got this gap here at 326.73. And we are down in that area right now. Now, remember, whenever we've got a gap opening down, there's going to be an overhead gap to fill, back up to Friday's close, like 330.67, whatever it was there. Let's see, 330.65. So don't be, shocked if they try to gun it up and fill that gap. And if you're really nimble, that is a nice move to try and grab. If you're more of a swing trader on longer time frames, just let that go, not worry about it. I'm sure, the game plan would be for it to come back down. But if you carried shorts over the weekend and you see that move back up to try and fill the gap, you can close your shorts, get long, and then recycle back short on a fill of the gap, because that's $4 or $5 that's worth playing for, definitely, if you're nimble and you get the right vibe to take off your short and go long for that bounce. Qs, we're down here in the 262, 263 range. Still looking for a first stop here at 255 and then down towards the low 250s as a second target. The 200 doesn't come in till 235, so that's $25 lower than we are right now. So keep those levels in mind on the longer time frames if we don't see any material bounce. 30-minute chart on Qs. We closed Friday at 266.87. We're down here around 262. Same idea. There's a gap here that they may want to fill. If we break down below this 261 area, we may see a faster move down towards the low 250s today if things get, a little panicky. IWM is treading water this morning here at 150 with a big gap to fill, a $3 gap to fill, 350 up above. But if 150 breaks, then your first stop is this prior low down at 147.5. And remember, we had talked about over the weekend, this has been working in a $5 range between 150 and 155 for all intents and purposes. So longer term, on a break of 150, we're looking for 145, and below 145 is a $3 gap to 142. I know that's not shown here, but that's what it is. So first move, 147.5. T2 is 145, and then T3 is 142 on a fill of that $3 gap from 145 down to 142. Moving on to FANG. Price is flirting with this 249 gap. In my mind, this is one of the highest risk-reward setups that we've got on the board. We've got a $15 wide gap, tons of airspace. If you see price, kick back to 250, 250, or even 255, that's a great place to anchor a short. If not there, on a break at 249. I would look out 2 weeks to the October 2nd expiration. If you're really nimble and you know what you're doing, blah, 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 you can, target that September 25th, this Friday expiration. But that may become a nail biter if there's hesitation, or if we get a green day and pops up. All that stuff that can happen. We'll really dig into those Friday options. So I would vote for, getting short with some at the money puts for October 2nd and see if we get that flash move down to 233. That would be an awesome win. And, setting your stop just above here. If it comes back, that's trading. You got a paper cut, get out and wait for a recycle back in, because I think this does go. I think it's too big. I think they're going to end up gunning for it. So I think that's definitely worth a shot. Apple, really kind of the same thing as Facebook. I looked in the pre-market. We're trading down at around 105. If you recall, we rolled down our 112.50s on Friday. We took a double to the bank. We're still short. We bought an extra week out to October 2nd. I'm looking for a move to at least 100 and possibly low 90s, 93, 92. Actually, there's a big head and shoulders that has formed that points towards 87, so that would be that target. But let's take first things first. Let's get this big price void filled, and then we can go from there. So that's working according to plan. Amazon, we talked on the weekend about this 29.75, 29.50 band. A lot of air down here. If you're comfortable with Amazon, I really like it short. I like it coming down $200 or $300 from here. There's a lot of airspace. And if you go look at that weekend video where we showed the daily chart, you will see that very clearly, that there's a lot of air here, and technical support not really coming in till around 2600. Microsoft 60-minute chart, we had talked about coming down to the mid 190s. We got that. I think we're down here around 195, 196 pre-market. I'm looking for a move down to 190, which was the original breakout level. And I would be pretty surprised if the dipsters didn't try to save it right there, you know, on that back test of the original breakout at 190. So if you are short, that might be a logical place to cover and see what the dipsters have. And if they don't save it here, get short again on a break below 190, because if they can't hold the breakout level, it's going a lot lower. I do have to point out, you see this bullish divergence. You know, we've got a series of lower lows, but with higher momentum. We don't really see that on the RSI, but on the momentum you do. You see the rising trend, and you see price in a lowering trend. That's bullish divergence. So that doesn't mean buy, but it may mean be careful on shorts for a potential, you know, reversal at some point down here. So be a little careful with that. This is the daily chart on Google, and I articulated reasons over the weekend that I wouldn't recommend really fooling with it. You've got a well-defined support level here at 1425, and you've also got the 200 coming up. Very logical place for a bounce. But if they can't bounce it, that would be obviously very bearish in terms of Google, but it also may be a sentiment indicator for this group as a whole. Because if, you know, as these names come into the 200s, the 200 EMAs, and they can't stop the selling, then things are going lower. Netflix, really, you've got a great line here at 465, 466. Below that, we talked about on the daily chart, is wide open down to 430. That is where the 200 comes in on the daily, and technical support. So that would be my first target on a breakdown below 465 on Netflix. Tesla has that battery day coming up. It's down in the pre-market, but not a lot. It's trading to the beat of its own drummer with that battery day and everything that's going on. If you've been trading it, you know, keep trading it. I haven't participated in a lot of this stuff here lately. It's really not my... I don't like these battleground stocks, you know, news-driven, tweet-driven type stocks. I know tons of money has been made, but it's really not my thing. But if it's your thing, longs still look good above this daily uptrend line. So play it for all it's worth. Good luck with it. But I'm not in this particular one. Okay, it's about 7:20 as I wrap up the video. Just some closing thoughts. We've got the follow-up selling. We've got overhead gaps to fill this morning. Of course, it remains to be seen if even more selling comes in right away or they try to gun it up to fill those gaps. And if you didn't take anything short over the weekend, we talked about this on Friday. If you're on the sidelines as far as your shorts and they gun it up this morning to fill those gaps, that's your opportunity to get short, with your stop just above on the completion of that gap fill. You'll get short at, much better prices, much better trade location, and then wait for it to roll back over, which is my base expectation. Now, if you're out, if you didn't carry anything over the weekend, and they start selling immediately, then that becomes a riskier short. And you've got to be very careful because, the downside opportunity because of the gap down has been reduced. So you don't want to short into the hole with any kind of size, because as soon as you get in there, then you've got the potential for a reversal with, not a lot of room to play with. So be careful in that scenario if they don't bounce it off the open, so you can get better trade location. Be careful about, piling in, on an opening breakdown. Try to get like a 50% halfback entry. There's going to be a bounce. It's not going to go straight down. So at some point, they'll bounce it. Put your fibs on there. If you see a 50% halfback bounce, take it. Right now, we're in sell the rips. We're fading bounces. We got sell signals across the board, still focused in tech. But as we discussed on the weekend, small caps are down the most. They're down 2%, and they had been outperforming. It'll be very difficult, even in these, during this cyclical value rotation that everybody's talking about. If the Qs and SPY are selling off, it's going to be hard for smaller caps to stand out green. So keep that in mind. So we're fading rips, and looking for more downside until the bulls prove that they can take it the other way. So I hope that helped. If you like the content, please hit the like button and certainly subscribe if you're new to the channel. I would really appreciate it. Over in the show notes, you can subscribe to my content and get all this stuff delivered to your mailbox each and every morning and throughout the day. There's also links to the blog where you'll find a lot of helpful information for aspiring traders at all levels. So this has been Chris Buss with Traders Profit Compass. Talk to you next time, and have a good day of trading.